Welcome back to my gap trading series, Unleash Your Trading Instinct. NVDA, we're gap trading NVDA, we're gap trading Apple, we're shorting it, we're doing all kinds of crazy stuff, we're having fun, we're making money, and we're enjoying it. Hopefully you can also join in on the fun. So before we get started with the charts, let's go over our guidelines. This is how we structure the high-level framework of what the lighthouse basically of our trading strategy. We have institutions as the first point of the gap trading guidelines, and that means that we want hedge funds and banks and all people with the big money also buying the stocks that we're trading, because at certain levels they'll double, triple down, or their cost average, whatever they do at certain levels, they do that, which creates volatility, and that's how you create profits. And the deal is where the gap begins or the gap ends. So the deal is the gap tells us where the deal is, and if it doesn't do the deal, we don't do the trade, and that's part of managing our trades. And if there are no gaps, we do patterns, and right now that's what we did. We did patterns with NVIDIA, I think yesterday. And I think today we had a gap up a little bit today. And we were prepared because what we talked about yesterday, we said, hey, there's a couple of scenarios or one or two scenarios that are going to play out, and we're going to be prepared for either one. And this is how we're going to trade it if it does develop. It did. So we traded it and we made money. There you go. Risk management, we don't want to risk more than 1%, 1.5%. Sometimes you can't control it. Sometimes it really closes below what our stop losses are and whatnot. And that is just the way trading is. But we do our lessons learned. We have a tab for our Patreons where we take a deep dive into our behaviors to figure out where we're going wrong, how to increase our profits, how to increase our consistency. So without further ado, let's jump into the chart. We had an interesting day today. Yes, so like I said, we had the gap up. And, we gapped up and sold off. This is a 5-minute chart. So within the first 5 minutes, we sold off a little bit. This would have been, so this is the opposite of, what we talked about on our other Apple video part. I think it's part 7 or part 2. I'm not sure. But our other Apple video we just did, we talked about, shorting it at the, once the price fills the gap. But here you could have bought it, but we didn't get there. So we didn't do the deal, so we weren't interested. But once we started closing above 190, that was it. 5 minute, 5 minute, 5 minute. If we go to the 15 minute, this is what I'm talking about, right? Like we got to go different time frames. We got to see those closes above that price, and that confirms bullishness and a continuation to the next breakdown candle high, like the high of the previous breakdown candle. So we got to flip through time frames. But which one? So this was it. I marked this in my previous video, and again, here's another one and another one. I told you to write these numbers down; they're important. And here we went, right? And here we go. So we managed to buy in. I think it was 191.64. I think it's where we got in. We sold at 193 something. I think. Yeah, we made $2 per share there. Beautiful, beautiful, beautiful. We put a stop loss on the remaining. And we put a stop loss, in the system directly, and it stopped us out. So again, that's going to go into the lessons learned on how we can improve that, because we really want to milk the market. It would have been nice to make another $50, $70, right, off of this trade. It would have been beautiful, but it is what it is. And then we came and checked in here. Oh, okay, and then we pulled back, and here at the end of the day, on some volume, we're coming back and testing this area. So what's the plan for tomorrow? Well, if we stay in between these ranges, I'm not really gonna be trading it. But if we start closing above 195, is it? Yeah, 195. If we start closing again on a 5 minute, 15 minute, 1 hour, then yeah, we will be looking at going long, as long as we have something to trade against, right? And that it's the setup is looking good. So you would have to have that similar. What we see here, gap up. We didn't crap out. We held. We closed like the first 15, 20 minutes, half an hour. So that indicates to me that we will go. It's an 80-20 rule, right? It's going to do this 80% of the time. That's why we just take the trade with confidence. We just go for it. because we know where we're wrong. If we start closing, below this low here, or below here, we're in some trouble, and we want to get out when that happens. Or even if we started closing below this 190, because it's such an important area. So if we would have came up here, and then instead of continuing higher here, we would have, it could have looked absolutely like this. We could have went like poked our head out. Oops. We could have poked our head out like this, and we could have traded back down. And as soon as we would have started closing below here on a 5-minute, 15-minute candle, right, hourly, that's a clear signal that we are not going to go. We're just poking our head out. There's a fake out, and we're not continuing. So you need to be aware of these. It comes with practice, and just doing this with me, you'll see these things over and over and over again, and that's how you build the confidence. And then if you follow the lessons learned in the spreadsheet that we're going to take a look at, and you follow the fundamentals, it all makes sense, gives you the confidence, and you execute the trades. So let's take a look at our spreadsheet. And here we are. So we bought 50 shares. And so we had the $2 gain here. I mean, the $50 here. It came back down, stopped us out. And this is what I'm saying. It would have been nice to make that extra $50, $75 because it just came and touched. And that's why I don't like putting stops in the system. And so again, I'm learning too, right? I'm refining my behaviors and my habits, and hopefully you are too, to become a better trader and milk those profits. So this is what I'm talking about. There's, we talked about Myrna. This was in here. Amazon too. So we're in Amazon from 35.50, and we're only going to close our positions long if it closes on an hourly basis below that. But until then, we're holding it. Hopefully making $100, $200 off of that trade. We'll see. But that's all I wanted to cover today. Thank you for joining. Thank you for watching. See you tomorrow.